What is up, everybody? Welcome back to the Strategic Holding Company YouTube channel. I am glad to see you. Today we have a very interesting topic. It is a topic that is very important to us at Strategic because we are a holding company. If you do not know what that is, don't worry, we're going to get into all of that today. But today we are going to be talking about investing, specifically short-term versus long-term investing. Now, if you don't know what that is, do not be worried. But I'm assuming everybody knows what investing is. It is the pinnacle. It is the backbone of building generational wealth. Your favorite billionaire, millionaire, they're talking about investing, and we're going to get you on track so you know what you're talking about. Let's not waste another second. All right, guys, let's go ahead and get started off with short-term investments. Now, the biggest component and probably the most obvious is going to be the time frame in which you are buying and selling a stock. So when it's a short-term investment, you are usually not holding this stock exceeding a year. Most of it is going to be held, bought, and sold within a time frame of a few months or a few weeks, in certain circumstances, even a few days when you're talking about day trading and things of that nature. The next thing is going to be high liquidity. So these are going to be very active markets. You're going to be buying and selling pretty frequently. So that's another thing that you have to consider when doing short-term investments. And then also you're going to have high validity, meaning that these stocks are going to be very impacted by external things. So they're always going to be going up and down. The market trends are going to be constantly dynamic because when you're holding on to something for a very short time, you're in it just for the short-term profit. So that is something you're always going to have to pay attention to, and I'll go into further detail with the long-term stocks as well. And the next thing, and probably the most important, is going to be the technical analysis. So guys, when you are approaching a potential buy of a short-term stock, there's no subtitle that says short-term when you are on the software about to buy the stock. Short-term is something that is defined by the investor, by the research that they do, that ultimately concludes them or allows them to make the decision if this is something that they want to buy and sell quickly or hold on to for a while. So the research process with a short-term investment is going to be strictly on the numbers. We're talking the market trends and the patterns. Now, opposed to long-term, which I will get into more detail, long-term is more so oriented about the company and the company values itself. So just remember this, short-term, you're looking at the numbers. Long-term, you're looking at the people in the company. Now, the risk versus reward with a short-term stock is going to be a potential for quick profits, but also a higher risk of losing compared to a long-term investing. Guys, I'm going to be completely blunt. Day trading is the extreme, but short-term investing in general is very closely related to gambling. Okay, you are taking a risk on your intuition, or maybe you have some type of insight. Whatever it is, you're taking a risk and you are risking losing. Okay, but sometimes you win and you can win big, but that is going to be the ultimate risk to loss for short term. Okay, let's talk about long-term investments. Now, just like the other one, the most obvious thing is going to be the time frame. Hence, long-term, when you're considering buying a stock and holding it for a while, that's exactly what you're doing. You're going to be holding it for a while. A lot of people tend to adopt the buy it and forget it mentality, meaning once you buy it, you're not looking at the trends really. You're not setting a sell at. You are just buying it and tucking it away. You might, occasionally look at some updates with the company, go to a company meeting because you're just more involved in the logos of the company and whatnot. But you're not paying attention to the trends. You don't have a heart attack when the stock price drops because you're in this for the long game. With that being said, lower trading frequency. So opposed to the last thing that we talked about was short term. For long term, there's going to be a lot less frequency. So there's going to be a lot less buying and selling. Usually you're going to buy in bulk. And, if the stock is doing really well, you might buy some more. But Typically, you're not going to be buying and selling. There's a lot of reasons for that, for tax purposes, because, every time you sell, you have to pay on that profit, but it's going to be a lot less frequent buying and selling with long-term stocks. The next thing is going to be lower validity, basically the exact opposite of the thing that we talked about for the short term. And something different that we did not talk about with the short term, because it is not a appeal with the short term, because you don't have any time to really benefit from the investment outside of the potential profit that you could make. But that is not necessarily the scenario with long term, because you have something called compounding growth, which I'm sure you guys are familiar with. But in pertaining to stocks, compounding growth is going to come in different forms. You're going to have dividends, which are paid out to share owners, and there's going to be just the compounding profit that you obtain over time, just years and years of the price of the stock increasing. So that's compounding growth. And then last thing, as you see, the second to last bullet point is going to be the fundamental analysis. We talked about that on the other one, but the analysis for a long-term stock is going to be the company. Who's running this company? What is the vision for this company? Do I trust that if I put my money in today, that it will be doubled, tripled, quadrupled 15, 20 years from now? That is the mindset when approaching this type of investment, opposed to what we talked about last time, where it's, I think in 3 weeks this is gonna boost because of this X, Y, Z, whatever reason. This one's completely different. You are really making an investment. So that is going to be the main components of a long-term investment. Okay, guys, so the risk to reward for a long-term investment, typically if you have patience, you are going to benefit. So historically, higher returns over time, but requires patience and tolerance for market downturns. That's what I was talking about. Buy and forget. There's going to be a lot of fluctuation within the market, of course, just like the short term, but this time you're going to ignore it because you're bought into the company. Remember, not the number, not the trend. For the last 3 weeks, you are bought into the company. So that is going to be the risk versus reward for long-term investing. All right, guys, that is the end of the video. Like I said at the beginning, very, very basic, very, very elementary overview of long-term versus short-term investment. But there is going to be a lot more content on investing here at Strategic. That is the backbone of our company. And as you get to know our company more, you will know that investing is very, very important to us. So like I said, there's going to be a lot more content about short and long term. We here mostly focus on long term, but short term is also very important. So we're going to get into day trading and other things of that area. So make sure you stick around, because if you find this stuff interesting and you like it, by the time you get done with the media on this channel, you're going to be invited to Warren Buffett's cousin's bar mitzvah next year. That is the type of expert that you're going to be. So make sure you subscribe and you keep up with the channel. I will see you in the next one.
Do you want to know what it is?